Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk a little bit about a hyperactive news cycle that we had over the weekend. We have several big stories that we need to cover. A couple that I haven't seen. I haven't seen. We've got charges being leveled by the DOJ against a former FOMC member and contributor, and the charges are financial and economic espionage. So it's a big deal here in the markets. We're watching closely. We're also watching the Trump tariffs. We saw the tariffs against Mexico be rolled back. That was about 2 hours ago. And we're really just seeing a dynamic situation that is constantly changing. So it's going to be a challenge to trade. We're going to have to be on our toes. We're going to have to be ready for anything. And right now we've just sort of got a real choppy open to the markets today. I think that there's a chance that maybe the tops could be in for U.S. equities indices. I think that is very possible. But also we're going to be looking at maybe the U.S. dollar. The U.S. dollar is up about 0.5% today. We're going to have to look at that. Also gold. Gold is up. And I'm also battling a little bit of a cold, so you're going to have to bear with me. The voice has definitely taken a beating. It has been extremely cold here in Dillon, Montana. So I want to welcome everybody to the room. Emmanuel, good to see you. Good morning, good evening, good afternoon, wherever you may be. Let's see what else do we got. Tuku, good to see you, Tuku. And Dragon 131, good morning. Good morning, Shane. When and how do you see the volatility ending? I don't know. I really don't know. I think we're going to see another couple weeks of really just choppy markets, and the reason why is you've got the Trump administration now in office. They're putting together all of their policies that they promised on the campaign trail, and we knew there was going to be some growing pains, and right now there is. I mean, these tariffs are going to have profound impacts on certain industries and sectors. I would expect sort of a market pullback here. I won't really say that we're going to see a market crash, but we're definitely going to see some angst. And right now I'm looking at the VIX. The VIX is up about 15%, and it's all about the tariffs, guys. It's really all about the tariffs. Bobby Bob, good to see you. Welcome. New month, new week. Brian Barbie, good to see you. Yeah, welcome. It's February now. I mean, it's February, so we've got a sort of a fresh slate of economic events. We've got a fresh slate of market action that we need to cover. And remember, if you want to trade, be sure that you get in there. Check out Switch Markets. Switch has everything you need to get you up and running with some of your favorite pairs and also your favorite commodity CFDs, individual stock CFDs and things. So if you're an international client, definitely check out Switch. There's a tremendous amount of trading alternatives for you. Now, if you're in the United States, you could definitely be looking at maybe Owanda. Owanda's a pretty darn good broker, and it's one that we've been endorsing for a while now. So if you're in the United States and you need a Forex broker, Owanda is probably a decent place to look. Now, as far as, what can we really say about today's economic calendar? There were some key events out. Very rare for a Monday that you get a full litany of economic events, but we really did. We had a bunch of PMIs out. The S&P Global Manufacturing PMI came in a little bit above expectations. The ISM Manufacturing PMI came in a little bit above expectations, and you also had the 3 and 6 month T-bill auctions. You saw those interest rates tick a little bit higher, and the reason why they would be ticking higher is we're expecting sort of a hawkish Fed at least through about June. So there's a lot going on here. Before we cover the big stories of the day, let's get right out to price action. This was sort of an interesting trade. This is this is going to sort of a look at our 9 EMA with RSI confirmation on a 4-hour time frame here for gold. And to start the week, right there, you had a situation where you could potentially have sold. On Friday, we went off the board above our EMA, but we also were in overbought territory. So we were looking to sell and really right on the open. Now, this is one reason why I believe that you need to let these markets set up if you're going to use something like a 9 EMA or any type of trading strategy. When they first open on a Sunday, it can be a rocky road. It can be really difficult because you're not necessarily sure which way the markets are going just yet. Traders are getting in. Institutions are making their plays to open the trading week, but you definitely want to be aware that maybe the market structure isn't quite set. Now we know what's going on. You can see right there, you did have a sell. You had an opportunity to sell. You could have sold right there and pretty much got stopped out right above that swing high. But now we're looking to get another potentially maybe a little bit larger sell signal. We're right in that area where we're right on the borderline of being overbought. You can see right there, 70.02 is where we were. So you're on a sell again. Remember, RSI over 70, we're looking to sell. Underneath 30, we're looking to buy. So right there, we went up over 70, and now we're waiting. With just the 9 EMA strategy, we're waiting to get a price bar close beneath our 9 EMA, and that's going to be our signal to get into the market. So I'm watching this gold very closely. I think that it could be a pretty good short, and the reason why you can almost look to short this gold market early in the week is because the dollar. The U.S. dollar is sort of it's rocking and rolling. It's definitely strong, and right now, I mean, take a look at the DXY, the dollar index 108. Something like that. Let's get those lines off of there. But you've got 108.97, which is up about 0.5%. It has started the week off just on an incredibly bullish foot. So theoretically, that stronger dollar is going to bring bearish pressure to your commodities. And I would expect to see gold maybe stagnate a little bit where we're at. You could definitely believe that maybe, just maybe, you could see a big maybe sell-off in gold this week. We'll look at our macro Fibonacci levels here in just a second, but I would sort of be looking to play the gold market to the downside, and the reason why is this dollar is stronger. So if we do look at our economic events today, does anything really blow us away here? Not really. These are a bunch of PMI numbers. I call them academic figures because they don't really mean a whole heck of a lot. They really don't. In my view, the key numbers that we need to be thinking about right now are inflation. So we're looking at CPI numbers, and then this Friday we've got NFP live. That's going to be a big one as well, non-farm payrolls. We're looking at the jobs markets, and we're looking at inflation. Those are the two biggest metrics in the world right now. So we're going to have to just be patient and wait for those numbers. This lineup of numbers today doesn't mean a whole heck of a lot. It really doesn't mean much. But to the dollar, you definitely have seen some good bullish price action in a situation where potentially you could be in for another bullish week of the dollar. And if that's the case, you're going to see a pullback in your commodities. So definitely want to watch this. As far as if you are trading the DXY and you're looking at this 9 EMA strategy as maybe the way to do that, then you're going to be looking for a negative bar close. And if you get a bar close beneath that 9 EMA, that's going to be your short setup for the DXY. So definitely some things going on right now to open the trading week, most of which are based around tariffs. That's for sure. T. Marina, hola. Good to see you, T. Marina. US 30, this was a big one for us. Really a nice pullback. To open the week, this was a fantastic trade if you got this one. This was we had a choice to make. We either had to buy a pullback in the US 100 or the US 30. The US 100, we still haven't quite got our pullback yet, but this situation right here was pretty darn good. Pretty darn good. You can see to open the week, we went right to 38%, 40.38.26. We saw the pullback there, and now we've had the bounce. So still very bullish for the US 30. We just haven't seen really any reason to believe that we're going to stop rallying from here. So we're very bullish here. If, in fact, you were looking to trade this thing, I would want to make my mistakes to the long side. I'm not really 100% certain which way this market goes this week. It really has to do with tariffs, and the tariffs are the biggie. They're the big deal this week. No question about it. Let's just get right out to the news. I mean, this is everywhere. Trade war heats up after Trump orders tariffs and Canada retaliates. Mexico, U.S. reach a deal that puts the Trump tariffs on hold. Essentially, Mexico is going to send some troops up to the border, and they're going to make a nice. Well, I don't know what they're going to do up there, but they're sending troops to the border to really tackle the immigration and potentially some cartel activity. And Trump's decided to put the tariffs on hold for a month on Mexico, which was about a 25%er. But realistically, this is the biggest news story out there, and you can see that the tariffs out of the Trump administration. It's no surprise, but it is shaking things up. And when it shakes things up, typically you're going to be looking at your risk assets, and you're going to say, okay, what can we expect? Well, we sort of already saw it right there. Nice pullback here to open the week, and then we've got a nice rally. So still fairly bullish here on the US 30. I think that you've got an opportunity potentially to maybe grab another long entry, but we're going to have to wait. These tariffs are shaking everything up, and even though we don't have a huge move, we really don't have a huge move yet. It feels like there is going to be one this week. So I'm ready to trade tomorrow, Wednesday, and Thursday. That's my game plan. I'm going to be going hard on those 72 hours, those days, and that's exactly what I would recommend. I would let these markets shake out a little bit for today. I'm in absolutely no hurry to go running headlong into these markets. Not right now. Let me see, Emmanuel. Dollar CAD had a big fair value gap. Please, is it a good trade for the week? Well, I mean, if you wanted to look at the dollar CAD, the biggest thing you got to remember here is you've got to remember that the crude oil market, it really is driving policy here. Now, you've got a problem if you're going to trade the dollar CAD. Number one, you've got the tariff saga. The tariffs are shaking up. They're absolutely shaking up the Canadian dollar. There's no question about it. But you also see crude oil. Crude oil is probably about flat today at right around $72.50. Still fairly bullish, a bullish price for this time of year. But we're waiting for a big sell-off. We really are. I'm waiting for the market to correct itself. And I think as soon as we start to see those U.S. supply numbers grow for crude oil, you're going to see those prices come down, and that's going to hurt the Canadian dollar. Now, the tariffs are also hurting the Canadian dollar. So, if I'm interested in trading this type of scenario here with the loonie, I'm potentially looking to take I want to be long. I want to make my mistakes to the long side of the ledger here, as opposed to trying to pick a top. Now, you can see today it's just absolutely a crazy bar. You see, sort of opened way up here, and then you sold off and filled in a lot of this gap. But your high is very important, 147.92. That's right up there, right around 148, which is where all the sellers dug in. So if, in fact, we are interested in trading the Canadian dollar this week, I'm just very simple. You can see there's nothing else even on my charts. I'm just going to do some Fibonacci work. This deep pullback down in here, maybe 144.65, something like that. That could be a real strong trade. You'll notice right in here we had just a tremendous amount of business done between the 62% and 78%, 143.76 all the way up to 144.65. That area right in there, there's a tremendous amount of bidding. So if we do get a pullback, and right now we're trading about 145.90, if we do get a pullback back down into this area, I really wouldn't hesitate to buy it. I think that that's a pretty doggone good trade. The only question that I really have for really the markets in general and everything in general is what exactly do the tariffs, what can they do to the loonie? I mean, it really is a big deal, and that's why you had the crazy action there. If you wanted to look at a 4-hour chart, you could certainly do that. I would really stick with my macro analysis here, just because it is crazy. I mean, that's where you're open. That's why I always talk about going into the weekend, you've got to be very, very careful, especially with the new Trump administration. Now, the Biden administration, they didn't really do much. I mean, they really didn't. They weren't in the news economically all the time. The Trump administration will be. There's moves happening it seems like every hour of every day you're seeing breaking news. So you got to really be careful going home over the weekend, either long or short, really much of anything, because this type of gap right here, and I believe that's the FVG, the fair value gap you're talking about, Emmanuel, here. This type of area right here, typically those gaps are always going to be filled in. But let's say you're short, and this thing opens. I mean, you open way up about 1.5% north. You're going to get leveraged out, and you're responsible for those losses. So I would be very careful holding anything over the weekend. My rule of thumb is this: if I'm way in the green, then I'm definitely going to be. Then I have no problem. If my trade's way in the green, then I have no problem holding it over the weekend. But if I'm at even, or if I'm down a little bit on a trade, I just as soon scratch it, come back and re-enter the market on Sunday's open. That way, you take really a catastrophe like this, you take it out of play. But you definitely can see right here on the 4-hour, we had a nice test of that 38% level that we sort of outlined, 145.92. Then you got a tremendous bounce, and now we're sort of trickling down. So for me, I would be targeting this dollar CAD right down in here, somewhere right in there, pretty much the back end of that golden zone, 62% on that weekly chart that we just showed you the levels for. That's a pretty good trade for the dollar CAD. All right, I entered a trade a little bit earlier today. If you guys are on TradingView, you could definitely see that the Leap, they got a contest going called the Leap. Right there, we had a pretty good trade earlier today on WTI crude oil. Right now, I'm holding shorts. We've got a 10 lot. We're holding shorts in the E-mini NASDAQ. I think we could definitely get a sell-off towards the end of the session. But for right this minute, it looks like this bullish market structure is sort of holding up. But what I really want to stress on this intraday stuff, especially with these U.S. indices right there, I mean, there was your big move, and now you're just sort of rotating sideways. So if we don't get a big correction in this market, you're probably going higher. So I definitely could be wrong on this one, but I'm going to look to stop myself out probably right up above the intraday high, somewhere up in there. And that's going to be about maybe a $20,000 hit on that. I'm not too worried about it though. Remember, these are fake. They're fake funds. They give you $250,000 in a demo account to start with on TradingView for this Leap contest, and you're going to have to make a lot of money anyway to win. So for me, I don't really care about taking the risk. We'll see what happens. Once again, this is not real money. These are demo dollars. We will be doing some real money trading later this week. I just would much rather actually use my capital when the markets are sort of going to play to my favor, and that typically is Tuesday, Wednesday, Thursday. That's when we get the good stuff in there. Let me see. Universal. Hey, Shane, how you doing? Where's Connor? Yeah, Connor's moved on to other pursuits. So he's working in the industry. I believe he's out of Dubai. I think he's out of Dubai somewhere. So he's working with a firm over there. But yeah, he's gone. He's moved on to other pursuits. It's a one-man band now, and that's just me for the moment. We may be bringing in other analysts too as well, but we just got to wait and see how this year pans out. And that's where he's at, Universal. Let me see, bro. Gold making all-time highs Friday and today. Laugh out loud. Yeah, I mean, it really is. I mean, when you're talking gold, definitely with this 9 EMA like we covered, You can see that you're just breaking out. And once we broke above December's high, January really broke. And if you want to look at your monthly market structure, which is what I would do, I'd be looking at something like this. Definitely an overbought territory, no question about it. But for me, anytime you see some compression like this, a real tight December, and I mean that is a tight December, you knew there was going to be a move. We sort of were playing it to the downside, thinking we may in fact just get a big pull off, or get a big blow out all the retail longs beneath December's low, and it didn't happen. Instead, you've got a real robust January where gold's up about 6.5%, and today it just keeps going. So for me, I like easy. So if in fact, we got these long-term numbers that are telling us basically to sell the market right now, I'm not interested in doing any of that. The number one way that traders lose all their money is they fight trends. Remember, there's no rules on how high this market can go. There aren't any. 3,000, that would probably be where I'd be looking to sell. But it looks to me like we're going to 3,000 sooner rather than later. Sort of been calling for this about the last 6 months. Going back to last summer, I really believed that we were going to hit $3,000 gold, and I don't think there's any question about it now. So if I was interested in selling and maybe taking a position, something like this, I'm going to have to see a test of 3,000 first. Now, we're going to scalp right in front of 3,000. I'd be selling 29,995s all day long. You're almost guaranteed that first trip up there to get a little bit of a pullback from right beneath that big round number of 3. There's going to be some short-term scalpers there right in front of that number. I think that's a pretty strong trade. But just remember, it's probably going to get messy up here around 3,000. You're going to see pretty good two-way action. And if, in fact, do we pick a top at 3,000? You can take a shot at it. But I just don't know that that's going to be a very successful trade for us to hold. So we're going to have to wait for some exhaustion. But like something like this, if we had really just a nice test, we're already in overbought territory here using the 9 EMA. So if, in fact, we got a test there, we could sell it. We could sell it. We just got to wait and get that bar close, I would say, beneath that 9 EMA. Now, you're probably not going to use a monthly chart to do this type of trade. You're probably going to be using like a 4-hour, something like this. So if we do just break and rally, then we could definitely use this 4-hour chart with our RSI and also our 9 EMA to plan our short up there from 3,000. So you're definitely going to want to do that. I think that that's going to be one of those trades that's a winner. We just got to wait for it to set up. And I know that we say wait. Well, we got to wait. We got to be patient and we got to wait. So it is like Bobby Bob said, it's a new month. It's a new week. Don't go rushing headlong into these markets. Let them sort themselves out a little bit. We're going to know a lot more about where everything stands by Wednesday, I would say, just because right now that weekend news cycle is crazy, and it shook things up in a big way. So be careful if you're in the markets today. As far as picking tops go, though, I would be digging in and probably selling right in front of 3,000. But until we reach that point, you probably want to be on the long side of the market because nothing seems to be stopping gold. Nothing seems to be stopping gold. So once again here, I'll be looking to go long here. Dollar CAD, I think that's a pretty good trade. And then as far as the gold market goes, pretty much in a holding pattern for right this minute. I think that we got to wait, and then wait some more. I know it's frustrating. I know we've got to trade to make money, but we got to wait. In any case, that's a good look at the gold market. Now, as far as silver goes, I've got a lot of questions about silver over the past 6 weeks or so, and it really is in just an incredible bullish type of a market environment, type of a market structure. You're up around 31.5, which is fairly robust for silver. Most of us believe that it's going to go up to 40-ish. Something like that, and it really indicative of what happened back in 2008 to 2011, where we saw a big-time bullish action in the silver market. I see the same type of scenario setting up now. We've got a debt problem. We've got some interesting things happening, on our monetary policy front. So to me, I'm sort of like, well, is it time to be long or short silver? You can see how crazy this can get. This is no joke. Silver's volatile. For me, I would definitely want to make my mistakes to the long side, though. So something like a daily chart, something like this, you can see that you've sort of already got that big sell-off. You went right down in here. It looks like to about the 50% line of this Fibonacci retracement sequence. 50% almost exactly, and then you bounce. So still incredibly bullish here for silver. Now, if in fact we were interested in making a trade maybe today or tomorrow on silver, you've got to understand where your macro levels are. As far as your weekly chart, you can see it's been a grind, but we've definitely done some pretty good work here the last 6 weeks or so, going from 28 up to about 31.5. The real question is where could potentially the resistance be? This would be one of your liquidity sweep areas, almost guaranteed. A lot of folks are watching that spike high relatively closely. And then the other one is going to be your yearly highs. I believe that's last year's high. 2024's high is going to be up there right around 34.86. So I'm watching this one relatively closely as well. I think that silver could give us an opportunity potentially to bid it. It is lagging gold, though. It is lagging gold's performance. We are starting to see the demand pick up for silver, meaning we need it for conductors, we need it for the AI boom, we need it pretty much for everything. And there's going to be a tremendous onus being placed on who can produce the silver, who can get it to the market, and who's going to sign the contracts to really ensure that demand goes to the next level, the global demand goes to the next level. So we really are waiting for a bullish break in silver. I think that it's coming. I don't think there's any question about that. But for right now, we would be conservative, be very cautious and conservative. But buying pullbacks is probably going to be a pretty good way to go about your business. Let's go down to a monthly chart and see what we have. You can see right there, you sort of got that nice bullish trend, really just compression, break, pullback, break, pullback. It feels like that we're going higher. So it will not shock me at all if we challenge last year's high in silver. I could see that happening relatively quickly. All right, this is one of the bigger stories that hit the news wires today, aside from the tariffs. I haven't seen this one, and this scares everybody because this undermines the integrity of the Federal Reserve, something that people really say that, oh, well, the Fed's great, the Fed's tough, the Fed's noble. This is not good news for the United States Federal Reserve and the FOMC. You can see right here, the Office of Public Affairs former senior advisor for the Federal Reserve indicted on charges of economic espionage. Essentially, this came out 2 days ago, which meant it broke over the weekend, and you could see that this ex-senior Federal Reserve official advisor was leaking information. It was leaking FOMC data to China. That's bad. That's bad news. What that does right there is that undermines the integrity of the entire institution, and that's something that we've heard Jay Powell and all the FOMC members just swear up and down that, hey, this is a great organization. We're very, very, we're very noble. We do the right thing. We're working out for the people, and that's a complete load of hogwash. Now you can see right here, you've got economic espionage. Basically, this guy was getting a hold of the Fed decisions and what the Fed was going to do, and he was leaking it to China. That's ridiculous. That's ridiculous. Somebody should really, they should throw the book at this guy for that. That costs people a lot of money. So anytime we have a big economic event like an FOMC or an NFP, we have to sort of be on the lookout for some chicanery. We have to know that, okay, nothing's 100% secure. Somebody probably already knows what's going to happen. And if we understand when the markets are likely to be volatile and when the markets are likely to be sort of irrational, then we have an opportunity to stay out of the way. And this right here sort of implies that that they were leaking information, and that the Chinese were trading it. My guess is it was large hedge funds. Probably you could trace them right back to the biggest hedge funds in the world, and they were all making the moves based on what they thought the Fed was going to do based on their insider information. Inside information exists. There's no rules. There's really very few rules in the world of finance and in active trading. So be very careful with the news cycle right now, and also be very careful around those key events. This week, we've got NFP Live Friday. That's going to be the keynote event this week. I'm going to have all the coverage for you. We're going to live scalp it and do everything. But today is sort of a day to game plan. Let's get our ducks in a row, and then tomorrow we show up and go pedal to the metal and see if we can actually get in on some big time trades. We'll have all the performance metrics and everything for you tomorrow. But today really is a great day to game plan. All right, let's go ahead and take a look at our trade of the week. And this was our trade of the week. We put this out on Forex Signals TV. It's just a quick little 2-minute video, so head on over there and check it out. Give it a click if you want. I'll drop it in the live chat inside the trading room here. But essentially what it is it's just a bid. We're looking to bid a pullback here, and the idea, the whole concept of this trade was DeepSeek brought about a lot of selling to the US 100 last week on Monday. We got the big crash. So what I'm looking to do is buy a dip, and I think it's possible. Right now we're trading 21,889, something like that, and we want to see a deeper pullback to maybe 20,275-ish, somewhere in there, where we can maybe get a shot to grab a nice long. It's about 1,000 points off. we could definitely get that by the end of the week, especially with NFP. So that's sort of what I'm looking at for the trade of the week this week. I want to target this area and follow the trend with the US 100. I think it's a pretty strong trade setup, but once again, we've got to get our numbers. The market has to come to us, and if it doesn't come to us, we've just got to wait. Let me see, Brian Barbie. It's all manipulated. I like to give people the benefit of the doubt. I really do. But, espionage, you're leaking information from inside the Fed. That's unbelievable. That costs so many people so much money. I mean, I'm sure we could probably link it back to some crazy intraday action that unfortunately we're all on the outside looking in, and the insiders are cleaning up, just cleaning up. So, there's really nothing we can do to figure out when that stuff's going to happen, when you're going to have, Chinese hedge funds trying to, run the market one way or the other based on insider information. But we also can be careful. We can be very careful with what we do, and we have to be, because something like that could just bring about huge swings in the market. It really could. So for us, if we do have our levels laid out ahead of time, or we have a nice strategy like this, we can at least manage our risk exposure, and that really is all we can do as retail traders. So beware. It seems like it's a new big headline every single day. All right, let's take a look at a few of these Forex pairs, and then we'll go ahead and call it a day. You can see right there, Great Britain pound USD. It was still the big enchilada. The Forex was crazy over the weekend, and it was all about the tariffs. And right there, Great Britain pound USD gapped down on the open. It wasn't really a huge gap though. We still 920 EMA. All right, let's put the 20 up there. Something like this. You can see we just traded that area back on Thursday, so I don't really see that as being a gap. I like 60 to 90 days to have a true gap. That one, in my view, it was definitely bearish pressure, but it wasn't a gap in my opinion, like we saw in Netflix. So we looked at that chart last week. But you can see right there, we filled the gap in, and now we're on the rally. So the real question is how can we trade this Great Britain pound USD? We almost were in oversold territory right there. You're about right around 30.33, so it's a close but no cigar. If you're using this strategy, you're probably not going to be pulling the trigger on a Great Britain pound trade, at least not on the 4-hour chart. Let's go to a 30-minute though. Now, you'll notice right here the 30-minute chart was pretty darn good. And this is all about, understanding when to use the different time frames. I'm a big fan of the 4-hour chart for Forex pairs, no question about it. But look at this with this 920 with RSI, we opened the week deep in oversold territory. So we were looking to buy immediately right there. We're still in oversold, and then right there, that's going to be really going long. And if you use the coding, if you coded up the strategy like we showed you to on YouTube a couple weeks ago, then you're long right there. You would have had a nice gold bar, and that would have been your long bid right around 123.19, and now you're up there right around 123.94. That's a fantastic trade. The real question now is, what do we do? Well, if you didn't already take the money, you could still stay long and maybe be looking at the top of market structure. But right there, we're over 70, so that tells us we are now on a sell. So if, in fact, we do see this 9 EMA cross underneath the 20, that's going to be our sell. It's real similar to something that we executed last Friday on or last week. I believe it was on one of our workshops that we did with the 920, or the 9 EMA. Pretty good chart, though. So remember, if you're going to target these markets and you're saying, Shane, I don't know what time frame to use and I don't know when to trade, a good rule of thumb if you're going to trade Forex pairs is the London-New York overlap. That's going to put you in pretty good shape to be making trades when the market's got volume in it, it's got depth, and some volatility. You don't really want to be trading crossovers when the markets are absolutely dead and there's nobody in there trading. However, the longer time frames are going to give you a little bit more security, meaning that typically you don't see the choppy price action you do on, say, a 5-minute chart or a 1-minute chart on, say, like a daily chart or a 4-hour chart. Of course, that turns it into a swing trading approach, not necessarily an intraday approach. All right, everybody, I've rambled on long enough for Monday. The biggest thing that I like to do on Mondays is game plan and be ready. And tomorrow, we're going to be ready. We're going to be ready. We're going to have a price action strategy workshop. I'm going to go through some price action strategies that we haven't covered in quite a while. We're going to be talking maybe the pendulum. We're going to be talking about maybe a few of the other price action strategies that we have in the trading room. And we're also going to be looking at our crossovers because those have been fairly dependable for us, I'd say, over about the past couple of months. And so we're going to sort of focus on maybe executing a few of those trades and walking you through the process. But we're also, we're constantly on news watch. So tomorrow, price action strategy workshop, we're going to be going through some Fibonacci's. We're going to be going through some crossovers. We're going to be looking at the pendulum. I'm going to see if I can find us a nice slow market and maybe line up a pendulum trade that potentially we could get in there and maybe make a few bucks. All right, everybody. That's a wrap. It's sort of a challenge today. I will tell you this. I have to go outside and shovel snow again. I had to shovel it this morning, but it's starting to stack up, and it's cold here. It's just the heart of the winter time. I feel like I got a scratchy throat and a little bit of pain down in there. So today was a good day to game plan. Tomorrow's going to be a great day to trade. No question about it. All right, everybody, I want to thank you for joining me. Absolutely, watch yourself. Watch yourself with this news cycle. Really, anything can happen. Anything can happen late in the day. We just got to be very careful here, but tomorrow's going to be a great day to trade, and I'm very much looking forward to it. Have a fantastic trading session. Trade the action well, and we'll talk soon. See you.